downsloping trend line. Look at, we're peaking above it. Now, it hasn't confirmed a breakout yet, but it is a good sign.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Gareth Soloway sees Bitcoin possibly dropping to 71K. We'll break down his shocking price analysis, current market outlook, and future strategies. Let's watch him to learn more now.
This is something I've really harped on to you guys. This is the 10-year yield. Now, the 10-year yield, and let's go actually over to the big board. Let's go just dissect this because this is that important. So follow me back to the big board here. Now, just to reiterate how important this is, when the stock market is declining, okay, so here's the stock market going down like we saw late last week, early this week, okay? When that happens, the yields tend to go down as well. Why? Because people are running for the safety of treasuries, which is what we're looking at. We're looking at the interest rate on treasuries. So the more demand for treasuries there are, the more they can drop the amount of interest essentially being paid on those treasuries. Instead, this week, we saw yields going higher. That was a dislocation. That was a warning sign. And really, most smart economists and analysts and traders believe that this rally in the yield is what pushed Trump to back down and essentially say, hey, let's cancel the reciprocal tariffs on every other country but China. And that's one of the reasons why the market's got a bid. But the point being is that the bond market is in charge. Everyone thinks the Federal Reserve's in charge of interest rates. No, that's not true. The Fed controls the Fed funds rate, which is the lending rate with banks, which generally in a normal market will set interest rates up or down. But when there's a dislocation, the market sets the rates. Essentially, what I'm telling you is that if China wants to, if the rest of the world wants to dump our bonds, our treasuries on the open market, yields will continue to go up. And there's a lot of speculation. That's what was happening here. Is no one wanted to buy our new debt that we were selling this week, the 3s, the 10s, the 30s. And then also they were dumping to drive this up, to put pressure on the administration so that they would back down a little bit. And ultimately, that essentially happened. And we did hear today that India might be signing a deal in the very near future, a first trade deal of all of these other countries. All right, so again, the key is this. Watch yields next week. If yields go up, markets are going to go down. If yields pull back, markets should continue their rally to the upside. All right, this again, for me, if there's one thing you're watching into next week that will guide you to where markets will be, it's going to be the 10-year yield or the interest rate on the 10-year.
Bitcoin surged to $86,000 after news broke that the U.S. would ease tariffs on key tech imports from China. The announcement, which covers smartphones, routers, and laptops, sparked a wave of optimism across financial markets, with Bitcoin leading the charge. Investors are betting that lower tariffs could ease inflation, boosting hopes for a Federal Reserve rate cut as soon as June. Crypto sentiment turned sharply positive over the weekend, with market intelligence firm Sentiment noting how quickly Bitcoin reacted to the tariff relief, rising almost instantly. However, Bitcoin's spot ETF market remains cautious, with major funds like iShares and Fidelity still seeing outflows, although these slowed dramatically by Friday. Looking ahead, Bitcoin's next major test is the $90,000 mark. Easing trade tensions, progress on the Bitcoin Act, and stronger ETF inflows could fuel a push higher. On the downside, any fresh shocks in the global economy could pull Bitcoin back toward $80,000. The battle for Bitcoin's next big move is heating up.
The next thing to also take note of here, if we flip back to the charts here, we can see this is the US dollar. And again, what happens in general, historically, is when there's panic globally, people run into the US dollar and buy dollars. The dollar should go up. What's happened to the dollar? It's going down. And this, again, is problematic. It tells you that maybe de-dollarization is starting to perk up again, where these other countries that are getting kind of targeted are now saying, listen, we got to kind of move away from the U.S. dollar being the reserve currency. Now, listen, it's not at that point yet, so no one freak out about this, but it is just something that you have to think about. Again, unintended consequences of going after other countries. And listen, you could argue if it's needed or not, that's up for debate. My point is just saying that the dollar does not usually drop like this, and that's important to take note of. Okay? All right, so let's take a look here at the charts. And again, going through NVIDIA up a little bit here. One of the lines on NVIDIA I will be watching very closely is this one here. This would be an area where if we fall or if we rally up into it, which would be around 126 to 127, that would be a very good shortable level on NVIDIA. Apple, again, I was in this trade with members of Smart Money Stocks. Look at the level, perfect gap fill. Right? Perfect gap fill. Look at the bounce on Apple, trading back to 198 closing here today. I actually think Apple could rally as high potentially as 209, maybe even 224, but that would be quite the rally if we got that move. Bitcoin, we talked about Bitcoin. This is that line on Bitcoin right here, down sloping trend line. Look at, we're peaking above it. Now, it hasn't confirmed a breakout yet, but it is a good sign. And if the stock market rallies next week, then it would likely send us up to these highs right through here. See this area right here, and then this high. Notice it's all in alignment around 88,500. That would be first resistance, and then you have your 92,000 level right here. All right. Gold today. Look at this move on gold. It just continues to rally up. I did short gold today. So again, I am on the record as being short right up in this range here. That's fine. 3-bar surges generally mark the ends of runs, or at least a pullback in the near term. My downside target would be back to about $3,000. We'll have to see again what it does on Monday.
Bitcoin made another big move this weekend, jumping 5% to almost $85,000. But many seasoned analysts are urging caution. Some warn it might just be another weekend fake-out, a pattern that's played out 6 weeks in a row. Crypto trader Don Crypto Trades pointed out that these weekend rallies, often driven by thin liquidity and hype, have consistently reversed by midweek. He reminded his 400 and 3,000 followers that weekend moves often don't stick, even if they continue a little into Monday or Tuesday. Still, not everyone is feeling cautious. Former BitMEX CEO Arthur Hayes came out swinging with full-on optimism, suggesting that the Federal Reserve might soon pump more liquidity into the financial system. Hayes believes if the Fed moves to stabilize the bond market, Bitcoin could enter a phase he calls up-only, predicting prices could skyrocket in the coming months. A recent poll by Altcoin Daily shows that most crypto enthusiasts agree with Hayes. About 75% believe Bitcoin will hit a new all-time high before the end of 2025. Hayes himself has set a bold target of $250,000 by year-end, assuming macroeconomic conditions stay favorable. Bitcoin's latest surge took it from a low of $81,500 to over $85,000, according to CoinGecko. Despite this move, Bitcoin is still 23% below its all-time high of $108,786. Its dominance remains strong at 60.5%, with a massive daily trading volume of $31.3 billion. But with thin weekend liquidity, the market remains fragile. One unexpected headline could easily shake things up as the new week begins. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.